Hey guys, my name's Alex.Martin, and I'm an accountant who helps business owners fix their financials so that they can make better financial decisions and ultimately make more money. So let's dive into today's topic. We're taking a look at Nate's business, and Nate runs a fast food restaurant in San Diego, or like a fast casual restaurant, maybe a diner, not sure which one. But he opened about 5 years ago, and last quarter his bookkeeper sent over the P&L, and his food costs were sitting at 29%, which is where he wants them to be. But his bank account's growing a lot slower than his sales volume, and he can't understand why. So that's what we're going to help him figure out today. And a few things have been nagging him. His invoices feel like they're getting higher, and he says that his chicken orders went up to like $800. So food cost has definitely increased. One of his cooks mentioned that they've been tossing out a lot of food that they don't sell. And he asked his bookkeeper if the waste shows up anywhere in the numbers and do they track it. And he just doesn't understand where all this is getting accounted for and the cost. And that's what we're going to talk about today a lot. We're going to talk about where it shows up and how we can actually track it. So if you run like a produce store or a restaurant like him, then you're definitely going to want to listen to this. First, we could take a look at what his books are saying and the cost gap between what actually happened and his books. But looking at the books first, he had revenue of 940K, and that's the same with what actually happened. So that's, you know, properly being accounted for. His invoice cost was 270K, just about, meaning that his food cost was 29% of his revenue, which is exactly where he wants it to be. And that's what his bookkeeper sees and presents to him. Now, in reality, his revenue is the same, but his true food costs after doing like a little audit, we figure out is around 360K, which is way higher than his actual invoice cost, and a lot of it's not being accounted for. In fact, it's $84,000 that's being untracked each year. That's almost 10% more cost as a percentage of his revenue. So this really impacts where he could spend the money in the future and limits what he can invest in to grow. Like he can't hire another cook because he's actually losing out on 84K, or he can't save up the cash to purchase another restaurant. But we're going to help him figure out how we can track this. But before we can talk about how he can actually go about tracking it, we need to resolve another issue first. To start, he had food delivered in week one, and then he used that in weeks one and two. But the invoice for that food doesn't arrive till weeks two and three. And the bookkeeper didn't actually record those costs until weeks three and four. This is a major problem because what most likely ended up happening is December's costs ended up in January, meaning he could have had less revenue and had to pay less taxes on that if he was accounting for it properly, but that didn't end up happening. So we need to resolve this issue, and a good way we resolve this issue is by tracking the actual food used in that month and accruing for it. Meaning that he actually receives the invoices for weeks one and two, but in weeks three and four, he's going to take a guess at how much cost he incurred based on his food usage rather than the actual invoice. And one way you get around this is you back out these costs when the actual invoice arrives and you book that in the following period. So you can have a more accurate profit and loss statement so you can make better decisions for the business. Now, in our audit of the restaurant, we took a look at the actual waste and what wasn't being tracked. So starting off, we have the prepped food waste at 1,200 a month. And was this in the books? Nope. That adds up to $14,000 a year, right? Doesn't seem like much, but we're going to go on to the next one, spoilage and produce. This impacts a lot of supermarkets, or like if you go to a farmer's market, this is a big issue, so listen up. This was $600 a month, which is about $7,000 a year, right? That plus this is quite a lot, but we're not done yet. Comp meals and staff food. So Nate's a cool guy. He feeds his staff. They can make themselves a sandwich or some eggs or some breakfast or whatever if they can cook it. And that adds up to about $800, which annualized is 9K, 9.6K to be exact. That's a lot of money. And then vendor short deliveries. This means the vendors didn't deliver the full thing and he still paid $400 for that. That's $400 less than what he should have got. And that adds up to $4,000 a year. All of this, maybe $3,000 a month, but that's $36,000 a year. And that was not being accounted for in QuickBooks Online, which is his accounting system. And the question is, was this invoice? No. So then how can we account for this? But before we go over how he actually accounts for that, let's talk about how he should track his costs as a whole. So first, we want to get the food available. And this is a simple formula. We just take his beginning inventory and we add the purchases, and that's our food available for sale for that month. Then we subtract ending inventory from food available to get our true cost of goods sold. Now, this doesn't itemize all the costs he's been incurring earlier, but this will capture all of it in his cost of goods sold and will be expensed. Then we take his true cost of goods sold, divide that by his sales, his revenue, and we get the actual food cost percentage. Before, he was just taking the invoice, adding the total, which is his purchases, dividing it by sales, and he gets 29%, which skips the actual inventory count entirely. So you need to be counting the inventory that you have and not just what the vendor tells you it should cost. So what does he actually need to track now? Well, this is the gap he needs to fill. So right now, his bookkeeper's tracking the vendor invoices, the dates the payments happen, invoice totals, and delivery receipts. It's a pretty simple system, but it's not capturing what he needs. And if we take a look here on the right, this is what he needs to add in order to track his real food cost. We would create waste logs, spoilage records, comp tracking. Those are comp meals. So if you made your own meal, right, you'd track it, right? He doesn't have to make his employees reimburse him. That's not what this is. It's just a way for them to track how much it's costing. Because if I was a restaurant owner, I'd say, sure, like make yourself a sandwich for lunch, right? I'd keep him happy and I'd keep him around. Plus, I'd be making myself a sandwich. But we need a way to track this. Then we need to actually do an inventory count. This can be done daily, this can be done weekly, this can be even done monthly, right? And you just take the difference from last inventory count and this inventory count to get the issues. To keep things simple though, you should start with the monthly count every time you close your books, on the exact day you close your books. And then finally, you should track the variances in your deliveries, meaning how much the vendor did not give you, and you could probably get a reimbursement from that or a credit against the next invoice. Like you call them up, hey, jackass, you didn't deliver 200 chickens that I needed. And then they'll be like, okay, let's make this right. We'll give you a credit of however much it costs. Like it's $3 a chicken, 200 chickens, that's $600 against your next purchase. That's cost you can actually save each month. And if you want to work with us, we can help you build all of this. Now let's bring this all together. The first fix we can do is actually taking a weekly inventory count. Like I was saying earlier, we just take the beginning inventory, you add your purchases, and then you do an actual inventory count at the end, and you get your true cost of goods sold. And you do this every Monday before you actually start cooking. It'll take like 10 extra minutes and you can have someone else do it, and it saves you a lot of money and a lot of headaches. And next, we'd create a daily waste log, which is simply just one sheet in the kitchen, and the head cook fills it in daily with four categories: your waste, your spoilage, the meals you let your employees make, and short deliveries. Again, super simple, but it's necessary to save a lot of money for your business. Again, it's super simple and will save you a headache of figuring out where your cash went. And finally, we're going to talk about accruing the cost on the delivery date and not the invoice date. And typically, the biggest problem here is on your invoice, it'll say the invoice date itself. But what we actually need to track is the date it was delivered, not the invoice date. Because from what I've seen, some people put the invoice date like 10 days after they delivered the services, maybe even 30 days. But that's not the invoice date we should be tracking for the expenses. We should be tracking the date it was actually delivered so we can recognize that cost in the period and not in the following one. And this is super simple, right? Like you don't even need new software for any of this. You just need a clipboard you can get for like $1 and print out a few sheets that we can help build out for you. Now, I mentioned this already, but if you'd like to work with us and get your financials up to speed, send us an email, which is located in the description, and we'd love to work with you and help you save money. If not, like this video, drop a comment asking for help. I'll try and help, and follow for more practical advice.